Good afternoon, everyone. Thank you for joining. We appreciate you being here and spending a little bit of time with us. This is episode two of From Gaps to Growth. My name is Bernard Nasuli. I'm COO at iEmergent. And with me today is our CEO, Laird Nasuli. Yes, we are married. And we are going to get started as soon as Laird shares her PowerPoint. I think she's.
I think I am sharing it, Bernard. Good
Yep,
morning,
yep, you are
I guess
sharing it.
good
You're right.
afternoon, everybody. Bernard, is it big enough?
I would make it bigger.
How's that?
Better. It's a lot better.
Okay. All right. Well, hello, everyone. Thank you for starting the webinar, Bernard. And as usual, technology, but it's not that it failed. I failed it at the last moment. Um, anyway, welcome to this webinar. Bernard, already introduced me. Thank you. I was really excited about this particular webinar because last time, if you were with us last time, and we went over the mortgage opportunity roadmap, um, the first piece of all of it really is about opportunity. How do you get started on this roadmap that takes you from, figuring out where your gaps are to actually taking action and growing? This piece of it is probably the most critical piece. So I'm really excited to dig into it with you guys. As thinking through it, there's a lot of different things we could go over, and I just want to let you know in advance that the deck I share is going to be relatively truncated because Bernard's going to walk through some of it live, but there will be a bigger deck available at the end that has a little bit more detail, some checklists, things, some tools that you can really use right now to do some of the things we're talking about. So, Bernard, do you have anything else to say, or should we just jump in?
Yeah, yeah. Let's get going.
All right. So well, I'm going to go back to the agenda for a second here. So what we're going to do today, we're just going to go over, Mortgage Opportunity 101. We're going to talk a little bit about what that means, some key points to any discussion or actions or, best practices relating to what we're going to talk about today is mortgage opportunity. Then we're going to really dig into two different pieces, and that's what I'm really excited about. Bernard's going to be able to walk us through some real life examples where hopefully the data will come alive and you'll start seeing yourselves and your markets as we go through this. Then we're going to talk a little bit about what can you do now, and hopefully leave a little bit of time for questions, although that never seems to happen. But as we get started, I think the first thing I want to ask you, to kind of set the stage from your perspective is, when you think about your market's opportunity, what do you think of? Do you think of loans in dollars? Do you think of penetration rates? Do you think of how many branches you have? How many loan officers you have? If you go through all the different things that you can use, you'll realize that there are a lot of ways to interpret what we mean when we're talking about opportunity. So go to the next slide. It can be quantified in a lot of different ways. Loans, dollars, growth, share, and even what we're going to talk about quite a bit is loan segment penetration. But every market has a different mix, and that's what makes this so interesting. Every single market is unique. And what we've found in all of our work, that every lender's opportunity in every single market is unique. Because so much of what makes something opportunity isn't just demand, isn't just numbers, it's fit. It's how do those things mirror or fit with and mesh with the products, the people, the programs, the processes you have at your institutions. So that's a big piece of what we're talking about today. Another key element that we will spend quite a bit of time on, and it's something that's very important in iEmergent, and that's that we're going to be talking about where the market is headed. You know, the word opportunity isn't about yesterday, it's about tomorrow. So we're going to, even though we're going to do some review of data that talks about where we've been as an industry and how you've performed, we're going to talk a lot of time about how the forecasts show where demand is headed. Why? Because today you really need to be doing the things today that prepare you for where you want to be tomorrow. So again, as we look at this data, keep in mind that the most important piece of this data is figuring out how to use it to do things, to make decisions, to bring positive outcomes to your organization. And that's really what that last bullet point is. It's how do we identify specific actionable opportunities? And we think of opportunities, we mean place, we mean people, we mean product, we mean a lot of different things. But it's important because it is truly the foundation of this opportunity roadmap. And we use the opportunity concept at many different places. So again, if you didn't, we're a part of our webinar last week, this will be in the deck. But really, we have this, we've developed this approach to how you go from finding gaps in your markets, and we can talk about gaps in terms of like market share gaps. It can be, actual origination gaps, but it can also be home ownership gaps if we're talking about closing some of those. How do you go from figuring out what those gaps are and quantifying the opportunity there all the way around the map? How do you get to the point where you have designed and executed strategies, and then most importantly, or just as importantly, measure and refine them so that this cycle, this opportunity cycle, keeps on going? Behind every single step is data. And so that's what we're going to go over today. How do you use data to effectively engage with your markets, their opportunity, and turn that into actual opportunity that you capture? So I think the first piece I want to talk about, and it's critical to me, is that when you think about growth or opportunity, usually there's two different ways to think about it. One is, what's new? Where do I have to go? What can I do to grow? The other way to think about it is, what have I missed? How can I improve? They're two very different concepts, but equally important. And what I like about both of them is that they start in different places. They have a few different steps. They answer different questions, but they both lead to better strategies. And that's, again, what we're going to talk about. So on one hand, and we're going to start with it, we're going to talk about discovering new opportunities. Where should we go next? Why? So, and that's where, we're going to talk about forecast, demographics, market data, to figure out where future mortgage demand is forming, and figure out how if that demand is going to match with the lenders and the lending strategy of today, or if that's demand you really do want to capture, what do you have to do internally to make sure you're a good mix with those? And so the outcome of the one path, the discovering new opportunities path, the outcome, or what we're looking for, are growth hotspots. On the other hand, though, we are going to talk about opportunity in the context of what you've missed. And this is where we look a little bit more at what's happened. Interestingly, though, we take what's happened, I find out where there are gaps, and then we look to see what closely aligned those gaps are to those hotspots. Because markets that have a lot of demand and new opportunities, and markets where you have big coverage gaps, put those two together, and that's your top priority market. So those are the two sort of paths that we're going to go down today as we explore, how this data works, from a lender's perspective. If you're not a lender and you're listening in, this really can work for any piece of the housing cycle, because at the end of the day, the center of all of this is the demand, and that demand is driven by the journey of a homeowner. So that's what we're going to start with. Bernard, before you pull up the map, Just a quick overview of kind of what we do when you discover new lending opportunities. Remember, the question we're answering, the big question is where should we grow? So just a quick rundown. First, we have to define what we're talking about when we say market. Then we have to figure out, demand. And we're going to talk about just not just saying it's growing, but by how much? How do you quantify that? What are the important pieces? Who's driving that growth? Meaning, which home buyers? Then, how well are we as an industry meeting the needs of what are growing households? And that's where we're getting into some of the home ownership gap stuff. Then we look at, okay, if these are the drivers, if these are the groups that are driving demand, what are the products and programs that need to be in place to satisfy them? And then finally, we're going to dig into what does it mean when we really look geographically at the hotspots and talk about how that turns into priorities. Bernard, why don't you get the map up and running and walk us through some of that? If that sounds like a good idea, you can put some of it into action much better than me talking about it can. Make sure you have the opportunity.
Yeah. All right. So hopefully everyone can see the map, and I'm going to zoom in shortly, but the idea right now is that we're looking at the entirety of Texas. We're focusing on Texas. We are a lender that happens to be originating in Texas. And so the first thing is to be able to look at all of Texas and see the footprint, see the different markets and what they represent. So you are looking at our forecast for the MSAs or the markets in all of Texas. Now, the colors correspond to dollar opportunity. Blue means fewer dollars, red means more dollars. So right now, I didn't have any of the labels, but I'm going to add the labels right now. It gets a little bit messier, but we can see, for example, that, hey, Dallas by itself is going to be a $50 billion market this year, followed closely by Houston at 36 billion, and then Austin in at 18, almost 18 and a half billion. Those are your top three, and I'm going to remove the labels again to just make it cleaner.
Can I stop you for 1 second here? Because I'm going to keep asking some questions here to help
Yeah,
us with this. This piece, since we're still looking at new opportunities, what you're really talking about, like when I gave that list, this is the part where we're talking about, what is the universe? What level of geography and data do we need? That's really what you're showing us right now. Is that right?
that's exactly right. It's looking again to simplify this specific discussion. We're saying, hey, we are a lender. We happen to be lending in Texas instead of nationwide or multiple states. It's just saying, hey, because even looking at just Texas, there are multiple massive markets. I think even that the top four MSAs or excuse me, four out of the top 10 largest MSAs in the US are in Texas. So, it's just a massive market in and of itself. But we're
So
we're keeping it
clearly,
to one geography right now.
so then clearly state level would not help, right? Um,
No.
And then, Bernard, when you typically look at this, I know we're going to use this to kind of go down to the next level. But what's interesting about those four markets, you showed their different size. But if you were to drill into each one of them, how would they look different?
Yeah. So let's kind of jump in. So you can see, for example, we're going to focus on Dallas today, the largest market, so the $50 billion market. And yeah, obviously it's red, a ton of opportunity in Dallas. But to Laird's point, if we start focusing on just Dallas, the opportunity that you see at the market seems like it's spread out evenly, right? That it's distributed evenly, and that, hey, just all of Dallas is a giant red market. That is absolutely not the case, and that is exactly why we need to get more granular. So now I'm removing the MSA level, the geographies, and we're going to focus on just the county levels. So let me adjust my legend. So now we're just focusing on Dallas and at the county level. So we've gone from the giant MSAs to a single MSA and specifically the counties within that MSA. So now, instead of seeing the entire Dallas market as a red area, now we are seeing, oh, well, Collin County and Dallas County are the main drivers. So Dallas is a $10.4 billion county. Collin is a $12.4 billion county. And th those two, along with Tarrant, who's not too far behind, is at 10.1 billion. Those three counties are the main drivers when we're talking about the market of Dallas. But again, we can go a step further because Dallas, not all of Dallas by itself is going to be a red area. So we need to go to another level of granularity. So we've gone from MSAs, then we are going to go to counties, or we are at counties, and now we are going to go to census tracts. And again, for those who may be not as familiar with census tracts are pieces of geography or set geography that capture between 2,500 and 10,000 in terms of population.
Bernard, I do
Uh-huh.
want to clarify one point, though. Again, I know that you're used to talking, but I'm going to make this a little bit question and answer because I think there's
Yeah.
a lot to take away from this. We stopped here, we're getting into census tracts, but there are times when we're doing this work where county level data is appropriate, right? Um, and,
Absolutely.
and MSA level. Can you give an example of that?
Well, it's yeah, if I return to the county level view of Texas, or excuse me, of Dallas, and I'm looking at this, yeah, it's one market, but it is a massive market. And as a lender, we may still not have the budget to be able to cover all the resources or invest everywhere within the Dallas market. We still need to make decisions about where best to put our resources, our money, our time, our energy, our effort, right? So that's why we need to differentiate even at this level. Okay, in Dallas, should I be putting a lot of money in Wise County? Well, not necessarily. It doesn't mean ignore it, but it just means that potentially you don't want to proactively spend your resources in an area that is going to be blue relative to other areas where your ROI is going to be much higher.
So though, when let's say an executive is looking at this from a let's say a bank or an IMB that's in 10 different states, MSAs, they're different enough that they could use the MSA level data to decide to get to this point, right? So if a lender is specifically looking for a high government purchase market, then we could be looking at that data at that more macro level to determine, well, where do we even go? Like, I'm not going to spend my time drilling in like we're going to do in Dallas if Dallas doesn't have the product, borrower, and loan mix that I'm looking for, right?
That's exactly right. The assumption here that I'm making is that we are the senior leaders, everyone on this call, we are the senior leaders at ABC Lender, and we have decided that we've looked at our market and we've looked at our 10 or maybe top 20 markets across Texas or across multiple states, but we've decided one of our priority markets, one of our top three markets this year is Dallas. And that's why I'm saying, hey, let's focus on Dallas because we have determined as senior leaders, we want to make sure that we are growing in this specific market.
Perfect.
Okay. All right. So, um, as Laird was mentioning, so even at the county level, it's figuring out, hey, we don't have infinite resources. If we did, we would cover every single county, and then that's the end of the story, is that, hey, we have enough resources, we can do anything we want in this market, and we can go after all of the lenders. But no, since we do have finite resources, and we do have to be intentional about where we are spending our resources, then we need to figure out, okay, in a large market like Dallas, where should we spend our money most wisely? And so that's where I was saying, okay, we've determined Collin, Dallas, and Tarrant are the largest counties, but now let's look at it at the census tract level. So, what does the census tract level reveal? Well, it reveals the neighborhoods or the areas that really are the drivers, are the little drivers of growth under each county. They are obviously much smaller in geographically, but they show you. They again to me when I look at this and I look at these maps on a daily basis, but these colors hopefully help you identify that these areas, these reds, oranges, and yellows are jumping out at you as the user. You are seeing these and you're saying, whoa, whoa, there's a lot of opportunity in these because as I look at my legend, I'm seeing that these red areas contain at the very least 700 purchase loans that we are projecting. So each area, I mean, could be sustaining for that specific lender if if you were the dominant lender in that neighborhood. Okay. But that is at the aggregate level. So that is when we are looking at all borrowers. But we can get into some segmentation of the market depending on, this is why we do this, depending on what I, as a lender, what we as senior leaders are trying to accomplish. What is our lending strategy specifically in this market? Is it just to go after as many borrowers as possible? Is it to go after specific borrowers? Is it to try to capture specific loan types? Again, as senior leaders, we determine how we're going to attack this market. And then based on those decisions, we can then use the map to figure out what is our best entry point. Where are the areas that really are going to give us the best ROI? So here's an example. Again, if we're looking at this in terms of just all borrowers, you can see that the opportunity is kind of there's a curve or a U shape, to the north and then to the southeast a little bit. But if I were to say, okay, now I just want to focus on the opportunity to Black or African American borrowers, where would I focus? Would it be the exact same areas? Well, let's take a look. Because now I'm just focusing on the opportunity to Black or African American borrowers, and you can see that there's still that U shape, but there is also a pocket in this southern Dallas piece over here. And this is going to yeah, go ahead, Laird.
Gonna say one thing to keep in mind when we're looking at the maps, though, again, part of this, we want this webinar to be something you walk away thinking, I know how I would start to do this. We're using the maps as a great way to display the fact that opportunity isn't evenly distributed. In reality, the map by itself doesn't necessarily give you all the information that you need to know. It just helps you understand how local this actually is and how much things shift. Because at the end of the day, just knowing which census tracts don't necessarily help, because you have to be able to, like Bernard was saying, look at those markets and actually quantify them. Like figure out, all right, well, if it's going to be a 60% purchase market, what percent of it is going to fall in the average loan size range that is our sweet spot, things like that. But so I just wanted to make clear that the map and the picture is really meant to display and help you find hotspots. But then the deep quantification comes from bringing in lots of other data sets. So when Bernard shows those, the flip, it's not like we're just going to say, oh, it's red. At the end of the day, five reds and oranges, or different census tracts roll up, and that, hey, around this branch we're thinking about putting in, there is, let's say, the opportunity for 1,000 loans to a particular borrower type.
Right. So getting back to the map, we're saying, okay, now this is the opportunity to African American borrowers. What does it look like if we were to, specifically target Hispanic borrowers? Where would that opportunity be? It's very, in this specific case, it's similar, but it's not identical. So, you can see that there's a pocket to the west of, downtown Dallas. Um, so be aware of that opportunity if you are going after that segment. And then same thing here with opportunity to Asian borrowers. And that is very concentrated to the north, and with a pocket to the northwest as well. But really barely anything to that western or that southern area that we saw with the other races and ethnicities.
Bernard, when you show this data, I noticed that and of course I know that you're showing the 2026. We could be looking ahead. Why is it so important, do you think, or why do you encourage our clients to look at the market that's coming as opposed to just looking at, current loan volume? What would they miss in a market like this if they were only looking at yesterday's data?
So the key for the forecast is that it is foundational. So what do I mean? What do I mean by that? It means that the forecast tells you or guides you or gives you the signals about where to invest those resources. So now specifically, I'm still talking about money, time, energy, and effort. But now specifically, we can break those down into, for example, your recruiting. Where are you going to be recruiting LOs? Yeah, you need more LOs in Dallas, right? It's a giant market, so you just need more LOs. The kind of the traditional approach is, well, I just need to hire more LOs in Dallas, and it doesn't matter where, it just matters that they're in Dallas.
And that they're
I,
good.
right, right. I'm arguing or I'm presenting that not only does it matter where you're hiring people, but also depending on what segments of the borrowers you're trying to go after, it is critical. It is crucial for your success. Because if you were to hire somebody with the thought process of, oh, you know what, we need to hire or we need to grow our business to Asian borrowers. They're a very fast growing segment in Dallas, and we need to hire. Let's hire an Asian loan officer. Well, great. If you happen to hire that loan officer and he happens to be or she happens to be living in this area, and maybe the entirety of Dallas County is their area of responsibility. Well, look at the colors. These are mostly blue. So by comparison, if you said, okay, I'm going to hire a loan officer and she is going to be in this area because I know the forecast, and because now I know that I need to put that person in the best position to succeed and therefore have them focus on this area, then you should get a very happy LO who is going to do very well serving that segment of the market.
I think one of the points I was getting at too is that, especially if you look back historically, last year, I mean, it's suggestive sometimes of what's happening, but it really doesn't capture, especially if we look at these home ownership gaps that are there with, whether it's income level, affordability is a huge issue. We were looking at a age cohort that are going to be first time home buyers. That's all new. And so those numbers aren't going to be in last year's HMDA or the year before. So that's another reason, because the face, if you will, the profile of the home buyer pool is shifting and shifting relatively rapidly in our country. We can't continue to rely on yesterday because it's really not the direction it's headed.
Yeah, and Charlene, did you have a question? I don't know if you can either come off of mute and ask, or if you type it in the chat, but please feel free to do that. We definitely want to make this interactive.
Oh, okay. Well, it's okay that you accidentally, we were excited. We thought we had a question to answer. So great.
Well,
Um,
hold on. Charlene, did you have that question?
she wrote back in the chat, Bernard.
I'm sorry. I didn't see that. I didn't see
She
that.
was, yeah. Um, so,
Oops.
um, another question for you, Bernard, is that uh, what other layers would you want to look at? Like if you're sitting with a lender, you're having this conversation, they say, "Hey, we want to dive in here. We want to serve that northern part of is that Tarrant County up north, or the county with all the you put the number.
Yeah, I'm putting the county view back on here. So
Okay,
Collin
so the
County.
Collin County. So they say they want to Collin County. If you were advising this lender, um, what is the first strategic you would want them to ask if they say, "Hey, I want to look at this hotspot." What should they ask you? What else do they need to know about this market before diving in?
Well, I think making sure that they are, laser focused and clear, excuse me, on their own lending strategy, because if lending to Asian borrowers isn't necessarily a priority, then I wouldn't necessarily say, hey, you have to focus on Collin County. I think it again, it depends on, are you just trying to grow? Or are you trying to reach specific segments? But once they acknowledge that, once we have that conversation, then it's figuring out, okay, it seems like there's a lot of opportunity in Collin. Does this match what is actually happening product wise in Collin County? And figuring out, does this match up with what you have internally? Are your best products matching up with what we're seeing the borrowers wanting or asking for in this area? Does that make sense?
So I want to bring up one other thing before we jump into the mist, the looking at uncovering the gaps, and that's that, what's the point of knowing this, having this data? Why do we want loans in dollars? Why do we actually want to know the actual number? Um, One reason is because that when you have a quantifiable number, you can measure and decide what success looks like. You can right size resources. If you just say there's a lot of opportunity, that's very different than saying there is, for me, opportunity that fits us, there's, $10.5 million of opportunity. So part of this exercise is, yeah, we can see the opportunity, but then the other things we have to do before we know what to do is we have to go and see who the top lenders are. We have to see, what is the concentration? Do five lenders control 50% of the business? Are there three builder lenders that's at the top of the list because there's so much new construction? These are the little things that you actually would continue to talk about after you decide that there's enough aggregate opportunity for you. But knowing those numbers allows you to set goals. It allows you to, work with your teams. It's much easier to tell someone, hey, you need to grow. You need 10 more loans versus you need to grow as fast as the market. That when you start making it so vague, it's hard to know what strategies to employ and what to do. And we're not going to get into the right strategies today. We're just talking today about the things you'd be thinking about um, when you're looking at new opportunities. And something we didn't show is the fact that we talked about loans in dollars, but we also would want to spend some time on the density. So you'd know kind of what did coverage look like there? How much opportunity is there in a square mile? And then the other thing that's super important is speed of growth, because you might have to make a choice between two markets, and one market might be bigger today, but it might be growing at a speed that is going to make it, it's going to be growing faster than, and potentially may not have as much competition. So the speed of growth is another big piece to think about when you're looking at capturing the right and quantifying the right, opportunities for you. Um, do you have anything else to add, Bernard? I don't want to just, I mean, we could talk about this forever, but
Yeah. No,
the
I did want to come back. So again, here we're at the county level, but we looked
oh yeah.
at the census tract level. So we just talked about, this is the opportunity for all borrowers at the census tract level. Now, we showed the differences in race and ethnicity and how the opportunity that's the same market, it's Dallas, but depending on the segments, the borrower segments you want to go after, you need to make sure you know where to find that opportunity. Now, it's the same thing if I were to talk about loan type. So, as an example, here is the forecast for FHA loans in Dallas. And again, you can see, okay, the concentration is over here, just a couple of pockets. But if you're going after that segment, those loan types, you need to know where to focus your energy. What is your priority? Again, you don't have infinite resources. You need to make decisions about what you're going after in the specific market. So that is on the loan type view. That's the loan type decision. But then we can also talk about low to moderate income or just income level of borrowers. So now we're going to look at specifically low to moderate income census tracts. And what I've done is I've added those LMI, lower moderate income census tracts, as pink on the map. And now the map is starting to get a little too busy for me. So I'm going to isolate the LMI census tracts by hiding that bottom layer and looking at just those LMI census tracts. So again, whether I'm a bank, a credit union, an independent, I can see if we are focusing on this specific segment in this specific market, these are the areas or these are the neighborhoods that have that opportunity. And I like to usually add, so this is just an example of when we talk about, potential coverage gaps. Laird was talking about, hey, where is there growth and where have you missed potentially? So in this view, here I've added some branches, but we don't even need branches. We just need loans of saying, okay, these are actual loans originated over the past 12 months by a specific lender. And when I see that, it's striking to me. Why? Because the majority of these are outside of the pink. Now, that doesn't mean that there's an issue or a problem at all. It just means that the majority of these loans are outside of the pink, which means that they're outside low to moderate income census tracts. If senior leaders at the lender are saying, "Hey, we need to do more LMI business," then absolutely there is the opportunity. It's like pick your spot. You could focus over here, you could focus over here, you could focus over here, or you could go after, some of these onesie twosie fringe LOs or census tracts, but that's where you could capture some of that business.
All right, I'm going to have to stop you for a second though, because we only have 20 minutes left. And
Yep.
you jumped into the gaps in coverage, but you missed that we need to back up for a minute
Mhm.
because when you're looking at opportunity, new opportunities, you start with the market. But sometimes the reason you back into missed opportunities happens way before this. It happens from the fact that, you ask someone, "Hey, what's my market share in Texas?" And you see what it is, and you're like, "Oh, I didn't think I lost a little bit of share. I'm doing okay." Well, then you're a bank, so you're doing, quite well. You're number five lender. I'm just throwing things out there. But then when you peel back by purpose, you realize, oh, I have a problem because when I don't look at home equity and HELOCs, and I don't look at some of these refi products, and I look only at purchase, I've lost a ton of share. And you don't know where, you don't know why, because you're just looking at Texas. So part of this exercise would be geographically, and you'll see this in the slide. I was going to go back to the deck, but I won't now. It's actually a piece of data that can start this missed opportunity, because it's hard to just go into all your markets and look at this, because it's hard, you can't really see what does this mean. But when you're looking at charts and you find out that, let's say you lost 2.2% share year over year. You went down 5, ranks, and it wasn't in Texas. It was actually just in Dallas or just in Austin. It was, kind of contained. And then you do a little bit more work and you see, oh, it's all purchase. Well, then you start doing and looking at things that don't have, you go back, you look at penetration rates, you look at application rates versus origination, rates, so that you understand your pull through. Because what you're really trying to find out is, where am I missing opportunities? And the reason I'm bringing this up, just because I'm bringing this up now, because he has the LMI tracks on there. This is a big piece of anyone who's thinking about their CRA goals and lending, because early on, without even looking at a map, if you see that the market is 10.2% LMI, and your LMI throughout the year, you don't have to wait for HMDA for that. Your LMI is running at 6.2%. You already know that you're missing opportunity. And that's how you get to this point where you're looking like this. Sometimes, though, you don't see it. You don't know. You look at all of your borrower mix, your loan mix, and you are happy with where you are because not a lot's changed. But when you start to dig deeper, you'll find that every lender is leaving something on the table. You just have to find out how much, and whether or not that opportunity that you're missing is also the same segment or geographic market that is going to be that where the market's growing. And I'm actually going to address this question because it's perfect. Yeah, so one of the layers on the map that we look at in a piece of our forecast is, how does population change? What's household formation look like? How are those things changing, not just in aggregate, but by race and ethnicity, by income, by age, because all of that's going to really start to inform, that who the potential home buyer pool is, will inform what opportunities there are, because that's where it really starts. It starts, the opportunity is limited by demand, and it's also limited by housing supply. So right now, with some more affordability issues, there might be places that are available. There might be a big number of households or people that are in the prime age for home buying, but they aren't at a place because of affordability right now where they're going to be able to actually be able to qualify. So those are all of the different pieces that go into that forecast of where opportunity might be. But one thing to think about is that this forecast is assuming no change. Getting out in front of that, basically widening the pile, going to new potential buyers before the market does, is a way to also not only gain share and grow, it's a way to also start cutting down on that home ownership gap, by race, by income, all the different ways, because those gaps are one of the only paths to growth that we will continue to have over the next 2 decades. So that's a great question, and it's built into the forecast. But even outside of that, I know Bernard has some other things that we don't have time to show, but you can overlay so many fascinating pieces of data on a map, or in charts, and using your comparison. Because at the end of the day, if you are looking at LMI, or if you're looking at, let's say, Hispanic households, and how well you do with Hispanic households, and you look at the whole market, and all lenders, 10% of all loans are going to Hispanic households. Great. But guess what? That market might be 20% Hispanic households. So you still have a 10 percentage point penetration rate gap between the market and lending. So that 10 percentage points, not everyone is ready, willing, and able to be a home buyer, but they're really important prospects for starting that conversation. And that's how you start getting, 2, 1, 3, 5 years out ahead. Um, so, so Bernard, the reason I wanted you to back up is because it's not feasible for everyone to go into every market to see if, where the gaps lie. We use the more aggregate data to guide this kind of analysis. And when you look at that roadmap, that happens earlier in the roadmap, and then it happens again. Bernard talks quite a bit about the playbook. It happens again at the playbook level. So no matter what level you're looking at, whether you're looking at your national footprint, a state, an MSA, a county, it's the same concept. It's the same concept as what's the market going to do? What does it look like segment wise? What does it look like product mix wise? What does it look like in so many different ways? Channel, there's a lot of ways to break it down. How do I compare? And then when you either find a market that has a lot of opportunity that might match you, or you see these big gaps, that's how you get to this spot where you're looking at this really local level of detail.
And actually, Laird, I want you to tell the story. It just happened. It was with a client. The client came to you and was like, "Hey, we're in this market. How is this other company number one?" And in fact, because overall, just the other company was just larger, right?
Yeah,
But tell you know what story I'm talking about?
I do.
Yeah, go
I
ahead.
do. Yeah. So a lender that we work with, was concerned about they had anticipated doing a little bit better job in terms of changing their ranking and share in a state. And what was interesting about it is when we really dug in, number one, the lender that they thought couldn't be doing so well was the only lender in the top 10 that actually went down in count. So even though that big lender was still number one and still had a lot of share, that lender who is sort of like, went down, the only one. So something so that shows you that you're not just looking at your share, you're not just looking at your rank, you're also looking at how quickly you're growing compared to the market and how quickly your competitors are growing compared to the market. Because eventually that will catch up and the share and the rank will shift. Um, but what was interesting about that is it went deeper than that. When we took off the purpose codes, then we realized there was a bigger problem in one particular loan purpose category. And then when we rolled back and looked at MSAs, we realized that the growth and or not, the lack of growth was confined to two markets. So there were two markets where the lender grew, it just was doing a fantastic job, and two markets where they were losing. Knowing that meant that they could put their resources in the right places. They could look at the markets where they're doing well and say, what are we doing so well? Let's do more of it, or let's figure that out. And then since they were able to isolate that statewide market share drop to these two markets, they were able to do exactly what we're doing right now, which is really drill down and understand, okay, why? And so often it can get down to accounting, and you're like, no, we have a good loan officer there. And then when you actually put these loans on here like this, you realize you have a branch right around these high pockets of opportunity and you have no loans. And you say, what in the world is going on? Well, that question is the first step to figuring out what solutions might be out there. And that's when you start looking at, denial reasons and product and who are your partnerships and are you involved in the community? So many different things have to be looked at, but you can't get there if you don't go, you know, footprint state, MSA, county, local neighborhood. But the flip side of that is you also can't build share top down. You have to build share bottom up too. So it's a really interesting dynamic the way that the geographies and the segments work together. That was the story, right, Bernard?
It was. It was. That was exactly right. Okay, so we have about 8, 9 minutes left. What would you like to, where would you like to go from here?
Well, first I want to find out if anyone has any questions. I know
So there was
webinars
a
aren't.
specific question in the chat about a way to see the population per census tract to inform which tract has the most potential.
Yeah, I answered that. Do you want to just show
Yeah.
it? You have the home ownership rate by tract on there. If you, I don't know if you have households on there, but you can just show that the interesting thing about this is it doesn't match. You might think it would match perfectly, but it doesn't. So let's say you put in population and um, if you just do that, that's perfect. Do Hispanic households and then Hispanic loans, you can see the fact that it doesn't match because of the difference between where there are homeowners and where there are renters. Um, so let's go.
Hold on. So here is the yeah, here are the 2024 households. So this is kind of a way to see to answer that question specifically in terms of
That's
okay,
crazy.
here are the number of households by census tract. But this again, if this is a downtown in a metropolitan city, isn't necessarily these aren't necessarily one of four family houses. This is could be apartments,
Yeah.
condos, whatever it is. So just keeping that in mind.
But if you then put on the opportunity for loans, it doesn't look this evenly distributed. It's much more pocketed for that very reason.
Right.
And then, Bernard, if you have the home ownership rate by tract on there, if you put that on, it should match more like what it's a little bit harder to see just because of the colors, um, but
This is in percentages.
yeah. So anything that's not orange or red is a lower than normal yellow a little bit. Anything green and below is low home ownership rate. So that looks more like what we're talking about. But that brings up the really that brings up a great point of comparing yourself to the market, meaning lenders, and comparing yourself to the market, meaning households, is not the same thing. And finding, and if you have this deck later on, one of the key pieces of, best practices is what are the right benchmarks to use. Um, you know, what comparisons should you be making? We didn't really have time to get into that because really the maps are more interesting and things like that. But there are some key metrics that we recommend looking at, not just market share, not just rank, not just growth. There's a whole bunch because it's the relationship between those different metrics that actually tells the story you need to hear. Um, and knowing, how do I compare with banks if I'm a bank? How do I compare with IMBs if I'm a bank? Credit unions, each lender type has a different set of strategies. And so part of your job in figuring out these missing opportunities and new opportunities is to not just go with the 50 to 200% peer group, that the regulators might look at, but to figure out who is like us and who isn't. If they aren't like us, how do we compete with them? If they are like us, how do we compete with them? And what are they doing? How are we comparing? So creating, strategy-based peer groups is a best practice that I think is also critical. Um, Bernard, should I go back to that final slide, or do you have anything else you want to show on
Yeah,
here?
yeah. There you go.
And this is why it's like we could have had just the one on the topic of what were we talking about? The topic of just new opportunities and new growth. But the point of showing the map though was to make it very clear that we that markets are just not that they're not, the opportunity is distributed in a lot of different ways. And so um, this is the exciting part though. You do both of those things. You look at what you're missing, you look at where new opportunities are, you use this very comprehensive types of data, drill down into markets, you look at breadth of segment, look at all these different pieces. But if you do this in the right way, in a formulated, strategic, routine, calculated way, you will start to see growth happen. Because that's all this data is what informs it. And so if I had to say, we have some key takeaways here, and, for each of these different steps, you can see the steps, what's essential, what pieces of data, what questions they answer. But at the end of the day, I like to end these things by saying, what's the one thing, one takeaway I want people to remember, but I'm going to let you say your own, but mine is this: the best mortgage markets opportunities are not the biggest ones. They're the markets, whether that's a person or a place, where demand, um, borrower need, gaps, and your ability to convert to actually take action, that's where they intersect. Those are the best opportunities for you, where there's a fit, not just the ones where you have the most loans, the most dollars, um, but where you can see and understand your value proposition next to what the market's offering. So that's my key takeaway. I hope that you do look through the deck, because there's quite a lot of details that are important that we just didn't go over because we didn't have time. But I do appreciate you guys listening. Bernard, do you want to close us out?
Yeah, my little remark is, again, hitting the point that your resources are finite. So invest them intelligently, invest them wisely, and having insight into where specifically or how granularly you can do what you need to do, recruit, work with agents, work with builders,
Yeah.
uh, figure out who the other lenders are in your area, and then tailor or make sure that your strategy matches to those. Makes a lot of sense.
So we just looked at these first three stages really of the roadmap. The next webinar that we have, we're going to be talking about how to prioritize, like choose between all these things and set goals. They're still pretty strategic side. We're getting all that out. We're doing that first because we really want to talk about your execution and the things, the tactics, the things we talk about a lot, recruiting and all the solutions. We want to make sure that we're always thinking about those tactics in the context of the strategy, and the strategy being in the context of the market opportunity. That's why we're doing it in this path, and we hope you join us next time.
Appreciate spending some time today with us. So stay tuned for episode 3, June 10th, and we'll see you then. Thanks, everybody.
Thank you.